So this is part 2 of the basic concepts in trading and investment. And as we have learned that prices moves in wave type patterns, which are called uptrends and downtrends. So let's see some examples on the charts and find out how these patterns work in actual sense. So let's see, this is a Bitcoin chart which started from, I think, 2011. This is, let me exactly check. Yeah, this chart starts from August 2011. And if you see the price movement, it's all down from here. It was 12 and it made a low of $2. After that, the prices consolidated for some time, or they went into range. Actually, when prices go into range, we called prices are consolidated. So it was a time when prices consolidated for almost November 2011 to December. It was a 1 month. It's not that much of a consolidation. But one thing I want to show you here about this huge wick. I told you that the prices doesn't move like this or doesn't move like this normally. It happens sometime. So it's an example here. What happened here? The price moved straight away to 15 and then came back and closed around 3. So in crypto markets, when the market cap of a coin is really low, these type of moments are very normal, and you can see a lot of these type of moments. But we are not concerned with these moments, and it's really difficult to catch these moments. You will of course be able to catch these type of moments when you are more experienced, but for the beginners it's really difficult to catch these type of moments. So we are talking about here, so the prices came down, so you can call it was in a downtrend. Then the prices started to go up until here. So the prices made a high of $7 in January 2012, and then the price dipped again. So if the market cap of a coin is low, then the movements are really strong, and especially when they are coming down. So how much, let's see how was this move. So this move came here a little bit up and then it came back. Now here, what happens here in this area? This area is actually, sorry about that, this area is actually from February 2012 to until here. It's June 2012. So 4 months, the price did nothing but it ranged. But in the meantime, the prices were going a little bit higher. But it was almost in the range between $6 and the low of $5. So this was a $1 range for almost 4 months. And after this, the price did not break down, but it went up. And so this area we can call accumulation. So real accumulation for BTC, I would say it started from here. So then same wave-like pattern until here. What happens here? It went straight down to where? To $7 area. And then again, it started to move up. Now, let's see how how is it behaving here. So what happens here? Sorry about that. Let me put it back. And let's see what happens here, this area and this area. Actually, this is again price came here and it went down, but it could not break this low, and it went and it challenged this high, and again consolidated for December 2012 to January. For 1 month, the prices consolidated again, and after that it broke up. So if this was breakdown, you could call it distribution, but here we can call this area a distribution and this a consolidation or range. So the prices are moving. Sometimes they start to move really in a good pattern, wave-like pattern up, and then they stop. Then they come down, they go up, stop again, and this was a really good wave, what it started. Look, from here until here, this is a move of $13 to $250. It's a very big move, and I can call it a move of, just wait, let me check how long was this move. From here to here, it was a 18x move, 19x move. So the prices appreciated 19-fold. But here you can also observe one other thing, that it's not that much of a wave. It's almost straight. So this type of moves happen in cryptocurrencies where there is very low market cap and there is very high interest. If you see the prices here, they dipped. How much they dipped? They dipped a lot. From $50, the price came to $36. And from here, from the top, this we can call a distribution. So from the top, the prices came straight down, 1, 2, 3, 4 candles. 4 candles, it means 2 weeks. In 2 weeks, the prices crashed from 257 to 45. And this is a move of, it's a long move, it's a move of almost 84%. So the prices went down almost 84%. After that, what happens? This was a, you can call it, it's a very short-lived bear market, but still we can call it a bear market. But what happens here? The prices again could not break these levels. So that here the level was 163 and the low was 60, and the prices start to move in this one and consolidation and broke this area. This area, all of this area we can call accumulation. Now, moving forward, again, the prices skyrocketed. When it broke from here, it went straight to 1159. So this is a move where a lot of participation was there. But here in this move also, you can see from 746 to 377, the price dropped. So in between these waves, there is a drop of 47 or 50% drop. After that, what happens? So this is a real downward move. This is the first real downward move where this was a big drop, but then prices moved in a wave-like downward pattern. So this was actually the first proper downward move for BTC, where BTC moved from, I will tell you it moved more down or not. Straight. Yes. So it moved from 1164 to 152. So this was a move of 86%. So the price is moving down, and the price moved almost 87%. After that, the price, what did price do? It stopped to move down and it turned into range. So let's see, we can call this area, all of this area is distribution. This area downtrend. This area is a downtrend. This is a downtrend, and here we have accumulation. What is the range of accumulation? Actually, the range is from here. This was a dip, but the price never went below this area. Never went below this area. Only once it deviated for a very short time here. It's only a small, it's in a 2 days basis, it deviated. Otherwise, it never went below from these two levels. The higher level was 312 and the lower level was 211. So this was a move of around 31%, 32%, or 33%, you can call it. But here, what's happening? The price is ranging. So this area after a downtrend where the prices finally broke to the upside, we can call an accumulation. Now, what happens next? Then the prices moved again up. Now the prices, see, you can see the prices are doing, sometimes they are reaccumulating. This is called reaccumulation, or you can simply call it a range. And after that, the prices started to move up, and we can see here this move. These are small, no, look, these type of move will always be there, where the prices come down 36%, 40% in cryptocurrencies I'm talking about. If you see stocks, individual stocks, low market cap stocks behave like same way like this one, but big stocks and indices, they don't move this much. They move maximum 20-30%, or in an uptrend they have a correction of 20 to 30%, and then they go up. Look, this trend was a very long trend. Look, from here, it started from where? This started from here. From the price started an uptrend from 310, and it went to in December 2027, it went to 19,700. In between, of course, in between, there are all of these corrections. This is called a minor and a quick move to the downside, and again, recovery, quick recovery. If it happens and it's around 40%, 30%, 50% for BTC or for cryptocurrencies, it's called corrections. They are not bear market. They are just the corrections. So this was an uptrend from 310 to 19,000 with in between corrections of up to 30, 40, and sometimes 50% as well. Let's see. So this was 31, 32%. This other one was 30%. Let's see this one. How long was this? This was around 36%. And this one was 40% almost. So there were corrections, but overall the trend was moving up in a way it should move, in a wave-like pattern. So what happens here again? The price stopped to move and started to come down. And we can call this area, all these areas. So let's see, there are all these areas. These all areas are distribution areas. What happens? People who bought down here, they just sell here. So sell pressure coming, sell pressure coming. This is distribution, distribution. Sometimes, you know, guys, sometimes it's very, very obvious, and sometimes you cannot consider or cannot understand until the move has happened. So sometimes if, look, for example, a wave is going like this, and then it stops for a while, for 1 month, 2 months, and then starts to come down, then here we can understand that this was a distribution. But areas like this, where the prices go up and come and down, the way it came here, you would expect that it would go again up, but sometimes it doesn't happen. Sometimes distributions and sometimes accumulations are also like this. They are very, very sharp. It all depends upon the market conditions, the fundamentals, and adaptations of the currency or whatever market we are in. It has so many factors into it. So see, now this one started this new wave, which is a down wave or a downtrend we can call. It started from here and it's going like this. Look, in between there are ranges like this. But what happens? It was up to 19,000. So what happened? For example, this area. Let me clean this area a bit. So because this is very important area and I have to mark them for your understanding. So look, the prices were here and the prices were here. So the prices ranged between these areas. It went up. This is called deviation. If a range is broken to the upside and comes back, it's called deviation. So look, it was like this, but in the end, it broke down. If it did not break down, but if break like up and then started to move up, then this would be an accumulation. But now we cannot call it accumulation now because the price did not move up, but we will call it a simple range. But this range was, how long was this range? It started in June 2028 and until November 2028. So it's almost 4 months this range was there. After that, the prices broke down. And from here only, then that the prices could not break this low of 3,200. So here, this area, let me clean this one. So this area, we call an accumulation here. Why? Because the prices broke this pattern and started to move up in a wave-like pattern. So until here, this is an uptrend. This is an uptrend. Oh, this is an uptrend. So here, this area is more prominent actually. We can call it distribution. And again, the wave started to come down. And this was actually, let me show you. This was actually, the Corona dump. In February 2021, if something really, really big happens in the market, the prices crash like this as well. So this was a Corona dump when Corona started February 2020, and this dump was alone. How long was this dump? It was around 60% down. The prices came down around 60%. So this was the Corona dump. Otherwise, this low, this high has to be taken because this was a downtrend and this was an uptrend. It had to take the high, but due to the market conditions, due to the overall markets, it couldn't go up and it went right away down to these areas, but it could not take these areas. That's why in a bigger scale, the trend is still going on and intact. So what happens? Look at this recovery. If sometimes look, the distribution or the downtrend is so fast, and the recovery, look at the recovery was so fast, and the accumulation occurred here. Accumulation did not occur down here. Accumulation occurred here. So this area is called accumulation. The recovery was so strong, but the prices held this area, and the accumulation occurred on these areas. So now, after that, what happens? A new trend starts. Look, this was accumulation, and then the prices started to really go up. Look, until this area. So the prices went from 10,000 to 63,000 in this period. So this is an uptrend. Now here we have prices to get down, and this is called distribution. Look, so many things happen, beautiful things happen in the market, and the prices went down, but they couldn't stay and came to retest this area, but they could not break. So this whole area is a distribution area, this one. After that, what happens? The prices again started to move down in a wave-like pattern. This is beautiful, guys. It stops for a while and then it breaks. It stops or go a little bit up and then they break. So the prices did move to the downside until they reached 15,000. So here, now, in between these areas, I would say it's this area and it's this area. So this area, what price is doing? Price went down for around from November 2022 to January. For 2 months, the price was really not doing anything, and it deviated from these levels from 17,500 to maximum 15,500. It made a level, but this whole area we can call a range and an accumulation zone. We can call it an accumulation zone. So this was an accumulation. Now prices has started to move up again in a wave-like pattern. Look, you may be noticing that these waves are not exact waves, but the prices are generally moving in these waves. And now prices are going up. So currently, BTC is in uptrend until we see distribution. Maybe it occurs here, maybe it occurs somewhere here, or maybe it still go up. But until we see breakdown, we cannot know that this was the distribution. Until we see breakdown from the down and then move, another move starts, which is in a wave-like pattern, we cannot say that this is a distribution. It's still a range, although this is a distribution in a sense. How? Because people who bought here, they will definitely be offloading their bags here. I myself have offloaded some of my bag here. I bought it around 24,000, then 20,000, then 18,000, then 16,000, and I booked some profit around 43,000, 44, 45, and 49,000. But some bag, there are so many things to investing. You cannot offload your bags totally, and you cannot load your bags at one point or at one price. Totally, you cannot load your bags and you cannot offload your bags, but that's a lesson for some other day. So this was BTC. Same pattern you can see in all the pairs, all the either it's cryptocurrencies or it's whatever. You can see all the currencies are markets move the same way. Look, for example, we see from here, let's not go very far. Let's see from here, it's just waves, just waves, just waves. And then sometimes it's deeper. Sometimes it recovery is faster and sometimes recoveries are slower. Sorry. Sometimes recoveries are slower, like they go into a proper bear market. So they take more time and more time. So here, let's see, here, this area and this area. This is all accumulation. You can call it accumulation because the prices started to move up. So for let me draw it clearly so you know the current market states, market in what stage for Ethereum. See, that was our bear market, and this was the low. This is called deviation. This was the low and this was the high, or I can say that this was the high. Okay, so this is a big range. So the prices went as low as 800 and then 800, 900, around 880 something it went. Yeah, 882. So the prices went down and then they did nothing but ranged until they broke. So this was all, especially this area, this and this area, it's an accumulation zone. All the accumulation happened here. Now, what's happening now? It's in a uptrend. The price is in the uptrend. So for cryptocurrencies, the moves are really fast. Either if the prices are coming to the downside or if the prices are going to the upside, moves are really fast. But for established markets, moves are a little bit slower and it takes a lot of time to move. Let's see, for example, this is a gold chart. Oh, I have some lines drawn here, but it's okay, no problem. So see, the gold chart, it's more stable. Let's see from the low of August 2018 to the high of August 2020. So see, the prices are moving in this price. This is corona dump and it's shown in gold market also when the price dumped sharply. But here, there you could see 50-60% move, and here what is the move? It's only 14% move. So see, now the mature the market, the smaller the move will be, or more time it will take for the move to happen. So it was only 14, but for BTC, it was around 60%. Now, this recovery was really fast for gold as well. So it recovered and then it topped around 2059 in August 2020. And after that, what happened with the gold for around, look, see. So for 4 years, so this was the low and this was the high. For 4 years, it's August 2020, as August 20, and here it's February 2024. So almost 4 years, the price did not move anywhere but in between these levels. This was a deviation here, and this was a deviation here. If yeah, so the prices moved in between 2060 and 1676. It is how much percent? The prices moved 17% up and down in this whole 4 years. So that's why, if you remember in previous video, I told you that sometimes consolidation happens or distribution happens for longer times. So this one was all arranged. Now it started. So this is all first accumulation and then distribution. That's happening at all in the same range here, but mostly the market is more active here in this area. So look at this move, so fast move to the upside, and then this finally broke, this higher level finally broke in March 2024, and now we can say that the prices are in uptrend. The gold price is also in uptrend. So a new uptrend for gold after this range of 4 years. So for mature currencies or mature markets, the moves are slow. For young markets like cryptocurrencies, which is only now BTC is around 14 years old, 15 years old, and other pairs, some pairs are every day there are new pairs coming. So new pairs are there. The newer the pair, the violent the moves are. Let me show you one move here, one coin here, which we took the trade as an example of violent moves. So this was a coin we traded. Sometimes chart I have to check. I think not this one. Okay, let me check this one. Yes. So this is the chart we have traded. This is an example I want to give you about the moves, and look at this. This was the move down, and look at the, because it's a very low market cap coin, the move up move was really strong, and then the down move was also strong, but still but here what happens? This is all range. So the range actually is, the low was, you can say the low was here, it was 0.0058, and for how long it happened? June 2022 until January 2024, almost 2 years. If I consider here March, almost 2 years the price was here and ranging. We took this trade here. We took this trade here in February 2024, and it moved the same way. It moved up here, the same way it moved up here. So this trade moved from here until our targets. It moved, we took some profit here and took some profit here. This trade is still on for but for a very small position. It was a 16x move. So these type of moves you can catch in cryptocurrencies, but it takes time to learn, and it takes a lot of patience and a lot of study and a lot of market times you have to give. So now we have just covered some of the moves, how currencies moves. In next lesson, we will see how higher highs and higher lows to be studied, what time frames we have to see, and how we have to engage our studies to learn about higher highs and higher lows. Thank you for your time. Bye.